We are back. This is The Real Money Pros. Find us online. Go to therealmoneypros.com. Sign up for the newsletter, please. Participate with us. Ask the experts a question anytime you'd like. The program is live on the weekends, but we will answer questions anytime during the week. Or you can call the program, 979-59-MONEY. Share your thoughts. What do you think about the government shutdown? Do you think our trade policy has gone a bit too far? What is your financial fortitude to be able to fight this war? It's an economic war against other nations trying to reset things as we understand it back to becoming fair. And then what do? Do you change your investment program? Have you adjusted things? Do you look for different opportunities? Share your thoughts, your questions, all of that. Go to therealmoneypros.com and learn who our great sponsors are, such as Apollon Wealth Management, our partner through and through, not only on this program, but also in our office as we're financial advisors, and we work with Apollon Wealth Management. If you're looking for a highly qualified fiduciary advisor, let us connect you. Go to therealmoneypros.com. We will do it. We're all over it. We love that. We want people to learn more about their investing, a better way to do it in a way that actually works, which is time-based, goal-based planning that ends with cash flow planning. We call it the bucket system. You can find it more out at therealmoneypros.com. Jeremiah, so I know we've got a caller we're going to queue up here on the program. Let's get him on the line. We'll do that first. We have Nick calling the program, calling out of Boise, Idaho. Hello, Nick.
Hey guys, thanks for taking my call. I wanted to comment on this rare earth minerals thing and the tariff that Trump's put on. First of all, like rare earth minerals, they're not actually rare. They're in abundance all over the globe. What makes them rare is it's the process of actually getting them, right? So like rare earth minerals, they're going to be produced when you're like smelting aluminum and lithium and all that kind of stuff. It's just, the thing is, it's messy. And so like, you know, the Western society, like, you know, Europe and the US, we've said, well, hey, we don't want the potential mess and environmental harms here within our borders, so we'll outsource it over to China. So it's not like we don't have them in our own dirt. Europe doesn't have them in their own dirt. It's just we don't want to do the messy work of getting them. That's why China has the monopoly, so to speak, on the rare earth minerals. And to that point, like with these tariffs and everything, I just feel like even getting that stuff over here, like to produce rare earth minerals here in the United States or to get manufacturing here in the United States, there's a time process that we have to be willing to endure if we're going to even produce our own stuff here, like semiconductor chips or things like that. I mean, I live here in Boise. You guys are in Boise. We see like how long it takes Micron to get a new fab assembly line up and running and actually producing chips. I mean, it's like a 5-year process. So on top of being willing to put up with like the, you know, the so to speak economic pain or market pain of these tariffs, we also have to realize like it's going to be like 5 years before we'd see any return on investment from onshoring things here in the U.S.
It's interesting. You do know quite a bit about this and what you're doing. Of course, I'm Googling it, trying to learn what rare earth minerals are. And there's minerals that I've never heard of. And just like you said, I guess they're spread around the world. It's just the processing and trying to extract it and separate it. And it includes minerals like most of them I don't even know how to pronounce any of them. Oh my gosh, lutetium. Okay, I got that one, I think. That's about it. There's 17 of them, evidently, and they're used for all kinds of things: lasers, catalytic converters in cars, electronics like smartphones, hard drives, flat screen TVs, etc. Now, if we send them over to China, Nick, they refine them. Are they saying that, as far as you know, that they're not sending them back? They're going to limit them, is what they're saying? And if that's the case, go ahead.
Yeah, they corner the market on the processing to like, because you got to like leach these products out. They're byproducts of other manufacturing processes, of other like metals processing and things like that. So China just holds the corner of the market on actually producing the rare earth minerals, but we all have it in our own dirt. Again, it's just like China was the one willing to say, hey, we'll do the messy, potentially environmentally damaging work of producing these rare earth minerals that everyone needs. But I mean, I understand your point before the break too. Like, well, I mean, if it's the law of supply and demand, if you control the supply of all of these things that the rest of the world needs, like you can demand the price. So I don't understand. I mean, I guess in the regards to laws of supply and demand, I don't know how Trump can then demand that China pay a higher price to bring those rare earth minerals over here when we're the ones that need them to keep doing what we want to do.
It's sometimes just the boldness. Yeah, it's just the boldness of the request, and I think it shocks people, but the reality is he's probably just saying what a lot of people would say, which is fine. You're going to control that, then we're going to control this on you. And a lot of that had happened. We saw that in the meeting with Zelensky earlier in the year, which is you're going to walk in here so casual and be a jerk to our vice president. You get no weapons, and they need them, right? And so restricting that is just what they can do. Now, do you have the financial fortitude to ride this out, Nick, for another 5 years, as you had mentioned? Could you withstand 5 years of market volatility? Does it affect your goals?
Well, see, I do. I think that's partly due to my age bracket. I'm mid-40s, so I've got another 20 years of working, investing, saving for those long-term goals. So, the short-term volatility I can handle. I think if I was like late 50s, early 60s, I might be looking at it differently, but I'd probably need to have my investments in different locations anyway, if that was my age.
Well, what about mid-50s? I'm just curious. Not like I would have an interest in knowing, but what about mid-50s too? We're not. Okay, I gotcha. Nick, thanks for the call. Certainly appreciate it. The phone line here, 979-59-MONEY. That's 979-596-6639. And how do you feel about things? Share your ideas with us just as Nick did. But let's go to Jeremy calling out of Idaho as well. Jeremy, thanks for calling the Real Money Pros. What can we do for you?
Hi. Yeah, I'm mid-40s just like Nick, but I was recently laid off after about 15 years. I have a sizable 401k, and I'm doing a little bit of job hunting now. Now, they did say that I could park it with Fidelity, because that's who it's from, for the near term, and then either roll it over into the new 401k if the new place has that, or I'm thinking maybe I just go to a Roth IRA now. What makes sense at this point in time? Am I good to just leave it there? I feel like I'm missing out on putting stuff into it, but I don't have much to put into it right now. And I don't need the money. I don't need to borrow from it. I don't need to try to, take the tax hit of the withdrawal. I have, a couple of years of savings I can rely on if, the worst comes to happen.
Yeah, no, Jeremy, that was the main question that I was going to ask you. It really came down to, what's your liquidity position? Meaning the fact that you're in this period of time searching for another job. And that would fall in lines of, okay, you don't feel particularly great about not being able to put money into it, because it sounds like you did a great job of, doing the net deferrals and taking advantage of that employer plan. That's great. So now just looking at this 401k on its own, it could make a lot of sense to roll it over into an IRA where there's no taxable event. It goes from the pre-tax 401k to the traditional IRA. You get more options as far as your investments with stocks or funds that can meet your objective. And then when you get reemployed, if your employer offers a 401k, see if they offer that incoming rollover where you can keep your accounts consolidated. It's all inside of that 401k. But we are up against a break. This is the Real Money Pros. Jeremy, if you can stay on the line, we'll answer more of your questions. We'll be right back. Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to the Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment investment advisor.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then used tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. This is the Real Money Pros, therealmoneypros.com. Jeremiah, you see me. I'm, for those of you that have listened to the program for some time, I'm actually building a cabin up in the mountains, and the weather's going to get a little dicey today, but you can't stay in the house yet, so I still stay in a little camper, or this last night we actually stayed inside the house. Just, I'm not sure we're supposed to, but anyhow, it doesn't matter. It's like camping inside the house, and I have bugs flying around my head right now. So if you were to watch our video feed online, then you'll see that I'm sitting inside of a really cruddy camper trailer that nobody in their right mind would ever want to own. This thing is horrible, but it's warm enough to broadcast in, and it's working just fine. It's dry in here the whole bit.
You got to love technology. You can broadcast from an undisclosed mountain location inside of a trailer. But from the view, you open up the windows, it looks great. You got the nice timbers in the background. Things are looking a little green. Certainly, autumn is alive and well wherever you are. We're going to bring Jeremy. That's right. We're going to bring Jeremy back on the line. I know, because we're having him hold a little bit. So just bring everyone back up to speed. Jeremy recently laid off, has a 401k, mid-40s, has a sizable 401k, really asking what to do with it. What are the options? And one thing that I really appreciate, Jeremy, that you brought up is the fact that you said, I don't need the money, which really brings to the whole point of you've been kind of managing the timeline of your money appropriately, because you don't know. This is what I explain to people all the time. It's like, if there's a rug pull or you leave an employer voluntarily or involuntarily, you got to make sure that you have enough liquidity, enough savings, emergency reserves, so you don't feel like your backup is against the wall. And when you're looking at your 401k on its own, I'm sure you've seen some pretty good investment gains from that account, Jeremy. Am I wrong?
Oh, no, definitely. I mean, obviously, recently ups and downs, but, for the most part, I'm well ahead.
There you go. So meaning you've already hit the mark of saying, I do not need this money. This is a long-term account for my future self in retirement. And I imagine you're going to want – do you have a set retirement date, Jeremy? Or are you looking at kind of the cliche, when I'm late 50s, early 60s, that's when I want to cut the corporate cord?
I mean, obviously, if earlier works out, great. But, everything is pointing towards like 58. I think it's kind of where that line wound up on the spreadsheet.
So, Jeremy, your preliminary planning puts you in a good spot. Your back's not against the wall. You do not have to mess around with that 401k as far as funding your lifestyle or your liquidity needs right now because you have that balance in your savings. So all that means is you don't have to get in the way of that compounding growth from the investment gains inside of your 401k, which is great. So we want to keep that same mentality, is keeping those dollars earmarked for your future self, growth-oriented, long-term money, bucket 3. This investment objective should stay growth. So now that we've determined that, now we arrive at, okay, what do we do with it? Do we leave it inside the 401k? Should I roll it over into an IRA? You mentioned the Roth component. Brian, you can give me your thoughts on this, but my take on this is if you do the rollover, if you do it into an IRA, there's no taxable event. And that traditional IRA that now is going to have your previous 401k balance, you're going to be able to manage it how you see fit. And in my opinion, you still stick to that growth objective, keeping that bucket 3 long-term money as the foundation of how you approach that account. When you mention the Roth IRA, there could be an opportunity for you to execute some Roth conversions, meaning if you see yourself not having employment for a few months or maybe carrying into 2026 or getting an idea what your taxable income is going to be for 2025, you can take advantage of that. Meaning if this is a point in time where theoretically it's just a point on its own where you're going to have less income, take advantage of that. Get that tax bogey out of the way now by doing that Roth conversion. Put some money into the Roth via that conversion. Any amount that you convert, it's going to be taxable as ordinary income. But then if you still take that bucket 3 growth approach with the Roth, all those monies in retirement inside of the Roth are completely tax-free to you. So meaning you're getting diversification of your assets in these various buckets, if you will, of money where the tax dynamics are different. So when you are retired, and let's imagine some high-income tax brackets down the line, you're pretty well insulated from that. So I think that's one strategy that you should certainly look at looking at that 401k. Brian, what do you got?
Yeah, that makes sense to me because that's exactly what I was seeing online.
Jeremy, how old are you? Did I miss that?
Mid-40s.
I'm mid-40s. Yeah.
Okay, mid-40s. And so your income right now, is it high income? Would you consider that? Are you 200K plus as a household filing?
Until I got laid off, yes.
Man, I'll tell you what, if you think you're going to get reemployed soon, maybe at the beginning of the year, and you think that this year is going to be maybe not your best income year because you have not been able to work the entire year, I'd look at those Roth conversions as Jeremiah was talking. The other part of it is we would hesitate typically as a financial advisor to encourage somebody, especially of your age, approaching the age of 55, because many people don't know that many 401ks will allow you to start taking distributions for an early retirement starting at age 55 if the plan document allows for it. So there's hesitation on our side to say, yeah, roll that out and you're going to lose that benefit though, even if we're going to find better investments. But that's not so much the case anymore because you're allowed to have in most 401ks, so if you reemploy, you can roll that money back into their 401k, then reestablishing that 55 plus benefit and not having to compete with this 59.5. So not a lot of penalties there. So I'd roll it. Let's say you could keep it at Fidelity and just have them title up an IRA for you, and then you roll the 401k money to that and then invest it as you see fit. When you get reemployed, consider rolling it back into the 401k, but do some Roth conversions in the midterm. We're mid-October right now. So as far as 2025 taxes go, we still got a month and a half to do some very strategic things to make sure that you're going to optimize this. And really the triggers don't have to get pulled until right up at the end of the year when you know everything about how your tax year is going to look. So Jeremy, are you working closely with any advisors right now?
I'm not.
Okay. I would highly suggest that now is a great time to find a really good advisor that has a really good accountant that they can work with. Take a look at your tax return, your year, your prospects for getting reemployed, and then calculate how much of a Roth conversion would be efficient, keeping you in certain marginal tax brackets. And if you need help with that, contact our team. If we don't have somebody on our team ready to help you, we have somebody that is part of the team that is ready to help you through Apollon Wealth Management. We can certainly find you somebody great.
Sounds good.
Thanks for the call. Certainly appreciate it. You can contact us. Go to therealmoneypros.com. Anybody else with questions, if you've got ideas, if you are in a pickle financially, if you want some answers, call the program 979-59-MONEY. That's 979-596-6639. And getting into, by the way, never worry about derailing us from topics. We know how just fine to get back onto the tariff conversation, rare earth minerals. It's not a big deal. Take us onto a different topic. We're here to help you. Again, phone lines, 979-59-MONEY. But rare earth minerals. So you have this restriction now. You've got Trump saying that he's going to apply 100% tariff against them. And this is the volatility we knew about going into this presidency. So any person acting surprised, I don't know where you've been for the last 8 years, because we've seen these type of things happen in the first administration and in a second administration. That surprises should not be very surprising. So much to the point, Jeremiah, that I mess around with a little, it's not a Vegas trading account. I call it my mountain bike trading account. It's supposed to make my mountain bike a little nicer in a few years because hopefully I'll have some great trades in it, but I can afford to lose the money. My point is that I know that volatility will hit this market soon. I don't know when. I don't know why. I don't know what the specific news driver is going to be, but I can tell you that I do believe that it will probably come out of the administration's office, some news that will then spike the market. And so, yeah, there's some investments you could take advantage of it, but most people, you're not going to change a thing, even if you know volatility is coming up, because you don't want to break your strategy.
Well, your strategy has to incorporate the fact that volatility exists in the markets. And one thing you have to understand, and this is a redundant thing I've said on this show so many times, and you probably heard it from somewhere else, is that
say it again one more time. I want to hear it.
Volatility is not it's not a bug. It's a feature in the market. If there was no volatility, no downsides to the market, there would be no opportunity to make money. It's like Jeremy just nailed it when he said, no, like, this is long. Like, he had a strategy. He said it. He knew that money was long term. He invested accordingly, and he even said it. Like, yeah, I've seen some great investment returns when you look at the entire sample size, and I can guarantee that throughout his 401k deferral journey in investing, he's seen some pockets of volatility. On average, in a year, you can expect, this is completely normal, you can expect to see 3 or 4 dips per year on average of 5 to 10% every year on average. So that tells you that that volatility exists and there's no getting away from that. So now you need to distill it down to you to how do you mitigate it. And you look at Jeremy as a prime example. He mitigated because he had a strategy and he set a time-based investing strategy that clearly is working. And again, we're going to see volatility. I wouldn't be surprised if we see extreme volatility in October, which historically is the most volatile month for markets. September is the worst performing month on average. In October, it's the most volatile, meaning you have swings up and down. We're approaching fourth quarter. You're going to see rebalancing. Be prepared. And if you're not prepared, ask us the question why you're not prepared. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's AXISPEO.com. Ataraxis, elevating businesses.
Have you ever met
for
with
the
a
benefit
financial
of all.
advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit TreeCityAdvisors.com and start your journey to financial freedom now. That's TreeCityAdvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
And we're back to the Real Money Pros.
Welcome back. This is The Real Money Pros. Visit therealmoneypros.com. It's where you can interact with us. It's where you can access previous shows' content. You can use the chat feature. I've had a couple questions come through the chat feature so far in this episode, which we will certainly hit on. But again, that is therealmoneypros.com. We are a sponsor-driven program. That is where you can see our sponsors. Ataraxis PEO, of course, a company that we've had experience with. If you are a business owner and you don't want to handle the headaches of HR administration, like how do you offer benefits? How do you adhere to the employment laws in your particular state? Like what specific disclosures do you have to display in the break room? These things are important, and this is where Ataraxis PEO can help. So again, visit therealmoneypros.com. It's where you can get access to Ataraxis PEO and all of our other wonderful sponsors. Brian, obviously we're talking about the response to the tariffs, the rare earth minerals. You know, the market clearly just doesn't like surprises. I mean, if you were to say, you know, am I anticipating this to be some burden throughout the remainder of the year? Well, it's been there throughout the year. And if these dynamics change, I think we'll continue to see more volatility. Now, this doesn't mean that you should change or pivot your overall long-term investing strategy. This is why we adhere to the bucket-based investing system, which helps you stick to the strategy. So when you see points or market blips or market hurdles like we saw on Friday, you can take it in stride, meaning you keep things moving. You don't feel that you, like, am I missing something or do I need to make some big pivot? No, not necessarily. But again, if you are looking at the activity that we saw on Friday from a market standpoint and this has you worried or it has your finger hovering over the button that I should sell, or, you know, the bubble is here and it's inevitably going to pop, I would take a step back, make sure you recalibrate, reevaluate, and understand that emotions are a big part of this investing picture. And if the emotional fortitude isn't there, this is where having that guide, so to speak, that can help you understand what's happening, give you the education, and have it all feed back into what is your desired outcome, what is the strategy that we're going to follow to get there, and make sure that we're in fact following it. But it's still fun to talk about. I mean, this rare earth minerals things. I mean, it's just we're. It comes down like that caller that we had from earlier in the program with Nick. It comes down to the refining capacity, and yes, China does have that industry set, and they are a producer about 90% of that. So, yeah, this in the immediate term could be a knee-jerk reaction, but I think this also spurs the urgency to have not such reliance on a different country that is going to supply these vital components when it comes to manufacturing. We're talking about aerospace and defense. When we're talking about I think the magnet piece is huge. That of one thing that I was reading on as well. So, these risks are there. We don't know if it's going to be, or we don't know what that risk is exactly going to look like and what form it's going to be and the exact time that it's actually going to happen. But we know it's there, and we know that over time it's always been there. We know that in the future it's going to continue to be there. So how do you approach that? And meaning if you're in a position where you're like, hey, what do I do? Call us. We can give you the answer. Phone lines are open. 979-59-MONEY. That is 979-596-6639. I think, Brian, you have some technical difficulties here. I can see you on the stream, but I don't think we're getting any feed from your microphone, which is fine. We'll get that. I can hear you.
Oh, it's working.
Okay, there we go.
You hear that?
Yeah, you're good. Sound
I
great.
can now, too. I don't know what happened. Maybe it's a big, thick cloud. I'm using Starlink. That's why. So, you're talking about, like, how does the rubber hit the road? We had Dr. David Kelly joining us here on the program, recorded a program with us, and we're going to play that next weekend. But we do have excerpts, and obvious questions right now from money managers, which is, how are you answering these questions to your clients? And I want to hear from you. Call the program. Tell us what your financial advisor is saying about this year. Like, how did you go into this year? What was the words that were said that either helped you understand it or calmed you down, or maybe it didn't? You want to share those with us? I'd like to hear. But Dr. David Kelly, we had to ask him, he's the chief, the global market strategist for JP Morgan, Asset Management. We're talking about a lot of money they manage. He's got to go in front of the alphabet soup of TV broadcasting, and he answers questions, and he's answering it as an economist, which doesn't always translate to, here's what I got to do as the Main Street investor. So we had him on the air asking about, on the big picture, like, what do you think about, like, for example, the tariff situation. Can you play cut 3, please, Josh? Be cut 3.
Well, Dr. Kelly, on that topic of AI, obviously that has been one of the biggest contributors of market growth, enthusiasm for investors. I mean, do you have concerns around the sustainability of that?
So what we're seeing right now is I think a lot of companies, a lot of individuals see the opportunity in AI because if these computers get smarter and smarter, there are a lot of service sector jobs in particular where, instead of calling up a call agent who's located in India, you end up just talking to a computer. And in theory, the computer is going to be smarter. However, I will tell you that my personal experience of, how many times have you yelled into a phone saying agent, because the thing that was supposed to be so smart at the other end is just sending you down blind alleys. So the day I don't have to yell at agent, I know AI is working, but that day hasn't come yet.
Yeah, no, I mean, he's not wrong.
That was about AI.
Yeah,
I pulled the wrong clip up. No, but it's still the same thing.
Yeah.
AI is actually driven by a lot of semiconductors. If semiconductors, scrambling about it, ultimately gets into and distills it down to even rare earth minerals, for all that matters, which is this clamoring for this importance of this nebulous thing that a lot of people may not be understanding. But we still have to understand it enough to figure out, how do we invest in it, for it, around it? Meaning it's there. It's going to affect my allocations. How do I integrate this? Does it need to be integrated? Those are really the questions, which is, from a financial advisor standpoint, sitting in front of somebody, I have always tried to assess their not only level of knowledge, but their level of interest, because sometimes they're just not interested. So then you realize, as a financial advisor, well, then they're going to rely on my interest of whether I feel like it's going to be appropriate, which is going to be right. But if you want to learn more about it, start asking questions, because now is a great time to do so. If you're missing the opportunity, if you're going to miss the opportunity of AI, I think you're probably going to take a step back in 10 years and say, dang it, wish I would have focused a little bit, given a little bit more, attention. But then don't forget about the fact that you still got things to do, like Jeremy, who said he's got a rollover. And, how do I optimize this? Well, he's in his mid-40s. I would say we're going to optimize this by rolling it to an IRA, buying individual stocks, eliminate all the internal costs, because you have no trading fees. You hold the stocks. You're going to hold them for a long term. Roth conversion strategy. We're going to try to convert all of this by the time you retire. That's all there is to it. It's that simple. So now we have to work with the individual to figure out, what can they tolerate? How do you get there? Can they actually tolerate that big tax bill for the rollover?
Yep, we got a caller on the line. John
conversion.
Calling out of California. And again, phone lines are open, 979-59-MONEY. That is 979-596-6639. John, what can we do for you?
How you doing?
Fantastic.
Let's see. I'm 100% allocated in an IRA, and I'm 65, and I'm really relying on distributions out of that IRA for my yearly financial needs. And I'm getting into some pretty hefty tax consequences. And I'm trying to figure out what I should be doing or doing different there.
Tell us about the tax consequences.
What do you mean you're 100%? Oh, yeah. Go ahead, Jeremiah. You got it.
Well, let me so I'm allocated about 50% in an IRA, and the rest of my wealth is over on the crypto side. But in the IRA, it's fundamentally that I have all of my stocks and mutual funds in an IRA. And so to get by on a yearly basis right now, I'm having to make withdrawals out of that, sales and withdrawals out of the IRA, and then put them to cash, pay bills. And so I'm getting a tax consequence.
Yeah, no, John, let me ask you, what's your filing status? Are you married, filing jointly? Single. Okay, so your marginal tax brackets are a little bit more compressed. What are you distributing on average out of that IRA, usually on an annual basis? Like, is that pretty consistent? What is that number?
I keep making it less, but it can be like $80K.
80,000. Yeah, so I mean, John, we're up against the clock, so if we can, hopefully get you to call back at the top of the next hour, because there's a lot of dynamics to this question that I certainly want to cover. So if we don't hit it all, keep listening in the second hour and make sure we're covering it. But you're absolutely right. When you pull money out of that traditional IRA, it's going to be taxable as ordinary income. The fact that you're single, your marginal brackets are a little bit compressed, which means more money's going to Uncle Sam. So how do you lower that number? It's a great question. We're going to cover that when we come back. This is The Real Money Pros.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade trade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deirdre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financial goals, visit therealmoneypros.com. That's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buy-downs that help lower your monthly payment for the first several years of your loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected, subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Bar and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. And need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's price, the number 4, life.com. Priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO.
Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates. The weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, welcome to the second hour of The Real Money Pros, therealmoneypros.com. That's how you find us. I'm Brian Wiley, Jeremiah Bates there. We want to know, what do you think? You've got President Trump making decisions. I said this back in April. It's like being drafted into a war of wallets and lots of things. Call the program, 979-59-MONEY. That's what we're talking about. Plus, we're taking phone calls. For example, we've got one on the line right now. John calling out of California. He's got roughly $400,000 sitting in an IRA. He's taken out about $80,000 a year, but he's got another good portion of his net worth built up in crypto. And we were talking over the break, John. I'm just going to guess here. Are you leaving the crypto investments alone because they're performing well, so instead you're drawing out of the IRA at this rate?
You absolutely have it. And in addition, not even that they're all doing well today, but the vision forward of those in advanced technologies. And I'm very bolsterous on the U.S. economy and that area long term.
Sure. Makes sense. And I like it too. So from a planning standpoint, though, we're finding ourselves getting into a scary spot because if you've got $400,000 sitting in an IRA and you're withdrawing at the rate of $80,000 a year, then we could say you're going to be out in roughly 5 years. So in 3 years, or the next 3 years, using the way that we would visualize this with buckets, is we would say you need to have $80,000 allocated to cash for 3 years worth of the payments that you need. So then you can tolerate the swings of the markets on the short term, but then you set up an income bucket to replenish that, hopefully getting $80,000 a year in income back into that cash bucket so you can continue to sustain it. But out of that $400,000, we would calculate right there, $240,000 is cash, meaning no more growth. The rest of it needs to go toward income, but then we would want to draw out of the crypto allocation enough money to continue to grow that income bucket to replenish the first bucket. So now is a great time to be asking this question. Otherwise, you're in a rapid decumulation on the IRA money. Does that make sense, John?
It makes complete sense, and I'll follow up with your team and such and get into it more. That's been very helpful.
Yeah.
It's the taxation
Certainly appreciate
side
the
and
phone call. Yeah, the tax part's a big deal. In your 65, have you started your Social Security benefits yet?
No.
Okay.
Well, sort of. I just turned the.
This is a great time to have the conversation. Yeah, because when you do add that, then we potentially are adding something taxable to your income scenario. We could then start to relax on the IRAs. So you've still got some options and different levers that can be pulled to make this actually become the most efficient it can be. Roughly, how much of your net worth is tied up in crypto non-taxable investments, meaning non-qualified investments, not in an IRA?
50%.
So about 200,000.
Yeah.
Okay, and out of that $200,000, how much of that is in gains over the last, say, 5 years?
I'm going to take a wild stab because I keep good notes and all this, but good records and such. But I'm going to say it's probably 40%.
And that's the reason why you don't want to sell the crypto, which would be much more efficient for taking your income. Because otherwise, everything you take out of the IRA is qualified. It means it's taxable as ordinary income when you take it. But you're leaving the crypto alone because it's your best performing asset until it's not. And that's the reason why we want to make sure that you've got the protection for your income. And we got to get into the habits of taking gains when we have them at the right time. Jeremiah, do you have anything you want to add to that?
Well, I mean, John, I would say this. I mean, the fact that you have that non-qualified benefit built up in the crypto side, I mean, there is a route that you can take. John, do you have any earned income? Meaning, like, do you have any other income outside of what's just being reported out of what you pull out of the IRA?
No.
Okay.
No.
Yeah, because I mean, when you're looking at the capital gains rate, so let's move the IRA out of the side to the side, and let's just look at that non-qualified investment for the cryptocurrency. So now you're running into capital gains rate where it's either 0%, 15%, or 20%. Now you mentioned that you're a single filer. So that means for 2025, if your taxable income to include money that you pulled out of your IRA, any gains that you would mark if you sold any crypto, and then you take away any maybe HSA contributions, and then also taking away your standard deduction, if your taxable income is under $48,350, you're paying zero capital gains tax. Zero. I think there's, and I certainly understand your approach towards, hey, I'm very optimistic about these assets and the ability to continue to grow. I don't necessarily disagree with you on that, but there's some tax efficiencies, because that was kind of the mark of your call of like, how do I navigate this tax bogey? I think you ring that 0% capital gain chamois as much as you can, knowing that if your total taxable income for the year is going to be below $48,350, then you could manage that. Now, is that doable? If you're spending $80,000 and you got to pull some money out of your traditional IRA in addition to the liquidation, that might not be feasible, but we could certainly, meaning it's going to be more efficient to look at the non-qualified asset versus taking the bulk of the distributions out of the IRA. And I agree with Brian. I mean, that rate of your distribution, it's your burn rate's too much for it to be sustainable, because if we see a downturn in the market, a crypto winter, it's going to significantly affect your quality of life from a cash flow standpoint. So that's when we look at the Social Security side of, okay, can we temper down these distributions in the near future, which is certainly something that we would look at.
Fantastic. I will.
John, we hope to. Yeah, please do. We hope to have a discussion with you off air as well.
Awesome.
Yeah.
Oh, thank you, John. We appreciate it. I think you're awesome for calling the program.
You both are awesome, and the fact that you're so you're knowledgeable in all the various domains is very valuable.
Thank you.
In the new age that we're up against now. You both are fantastic. I will
Thank
follow
you,
up.
John. I appreciate that comment. That is something I've been telling my team for a long time. As I said, I didn't know it, but by reading the news and having the broadcast for 25 years and having guests on that could talk about taxes or estate planning, is that we created a real broad knowledge and just a really good set of tools with all the advisors on our team. What I've noticed as we're mentoring other advisors is how myopic, I guess, their practices. They just see the one thing. It might be just the investment management. They're forgetting about the tax components. We have to understand one thing, which is if you could save yourself, let's say, a 20% income tax by not taking IRA money, and John, thanks so much for the call, and we look forward to the conversation with you in the future, but if we could save on that, that means we don't have to earn the outstanding gains that you're getting on the investments, which means you can reduce your risk simply because we found other savings and taxes. Well, like Jeremiah was just saying, if you could avoid taxes on taking crypto gains, it doesn't mean you can't have the crypto investments inside the IRA still. Now, we're going to compete with you a little bit on that one, but still, you can have that. It's just we're going to do it in the most tax-efficient way. And the broad base knowledge, I think, is the hallmark of the Real Money Pros and something that we want you to know as well. You can call about estate planning. You got a question about a will or a trust? I'll give you the advisor perspective on it because we're the ones that actually work with the families at the tail end of it, try to sort out what the attorneys had written up and help them get through a probate process if it's even needed. But we like to try to avoid those by making sure those questions are asked during the initial consultation, which is what do you have in place? Insurance. We don't sell insurance. Heck, we should sell it because we refer it all out. We instead tell our clients, okay, you need to get this. It's like a prescription. Go get it filled. And then I realized that we're sending that out and somebody else is making money off it. But we had decided that we were not going to have the conflict in our advice. We were doing the same thing with taxes. And then we're sending people to CPAs or EAs that may not have the capacity to work with the clients in the way that we wanted it. So we're going to start a tax service and just start processing our own clients' tax returns because I know that it'll be more efficient. So that broad-based knowledge, yes, thank you for that. Glad you noticed. 979-59-MONEY. That's 979-596-6639.
Yeah, John's he's not alone in his, I guess, where he's at, right? I mean, he's 65. That mark is it's an important age to pay attention to because now you're looking at Medicare. Now you're probably already retired. You're probably considering what filing strategy for Social Security makes the most sense. I've been delaying gratification and I have money inside of a IRA, maybe a Roth, and then the non-qualified accounts that we talked about. So again, all of those are so important to understand and have the education behind. And you notice that we didn't really, it wasn't so much around the investments. Yes, that's such an important part, but you're investing why? You want investment growth for? You got to define that outcome, and then you can logic yourself into the appropriate investment strategy, a.k.a. the buckets. We got to take a break. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
And now, back to the Real Money Pros.
We are back. This is The Real Money Pros, therealmoneypros.com. That's how you find us. You can contact us, 979-59-MONEY. Share your thoughts about the economy, the tariffs, the government shutdown. Heck, AI, since we already pushed that out as well. Crypto, what do you think? How about that last caller? Do you have a similar situation? Contact us. If you go to our website, therealmoneypros.com, you don't pay for the newsletter. You participate in it. We send it to you. You get lots of great ideas, to include ideas from our sponsors who we've already vetted out. So if you're self-employed, we know companies like Formations Inc. that can help you. If you're looking for a mortgage, we got a Guild Mortgage. And you continue on. Apollon Wealth Management, we can provide the advisors to you. We know the broad-based knowledge that you need to access to be able to get yourself to the level of a Real Money Pro. The level of a Real Money Pro is really easy, actually. If you just learn the bucket system, go to our website, watch that. It's simple. We calculate ourselves into these numbers. So if I were to just use rough numbers from that last phone call, we could talk about, well, what has he got? $400,000. He needs $80,000 per year. If that's the case, the first bucket's going to have $240,000 in cash-like investments. The middle bucket, the income bucket, needs to generate $80,000 a year worth of income. How much money, at what rate does it take to generate $80,000 worth of income? What rate are you using right now in your planning primarily?
I mean, if we want to do a conservative number this is from a yield standpoint. Right?
Yeah, everybody number.
What is it generating from an income standpoint? 6%?
Okay, so I take $80,000, I divide it by 0.06, and you come up with a giant number. It's $1.3 million, which sadly, he doesn't have inside the account. So you would need that much money to generate $80,000 a year at 6%. So where else do we go? Will we go at, do we need to be taking all that money out as taxable money? For example, if he takes $80,000 out, he's paying taxes on it, he's going to net significantly less than $80,000. So if that's the case, maybe we could take out less from a non-qualified account, avoid the taxes in its entirety, allowing the IRA to continue to grow to create a bigger asset, which is what we want. This is the value of planning, and all of it is at risk if there was something that could take it all down. Let's say we didn't know about a bad health situation or a change in a job situation that could happen, or an opportunity, whatever it might be, a marriage, who knows? The more you know, the better you can plan. The more you can plan, the more at ease you'll be, the less you're going to question the news and what is a rare earth mineral and why you're so up in arms about the new announcement on Friday, because you got the planning. This is about peace of mind. And I know it, Wall Street seems like it's working against you. It's not. It's actually not. We want the risk and the reward of Wall Street. We want actually people to not believe it and to people to be a little bit overreacting. We want people to not really understand it, because that's how you're going to gain. You got to be the smarter money. That's what the Real Money Pros is all about. Good stuff.
No, it certainly is. You know, I talk about these seasons of life. Like, you know, for me personally, I got a little 1-year-old, little boy who's just turning into a bit of a terror. I love the little guy, and I'm certainly seeing the difference between having a baby girl and a baby boy. My daughter's 7. She's entering in the extracurricular activities of, you know, we're going to do flag football, we're going to do dance, or we're going to do cheerleading, like all this stuff, right? So, you know, my season of life is starkly different than where a lot of other individuals are at, particularly, you know, the callers that we've had calling in. John, right? It's just completely different. So, you know, we talk about peace of mind, and we talk about the the risks that are involved with the market. Like, what are the risks to the total plan? Well, yeah, in various seasons of life, that risk is going to look different. Like, what are you going to hold top of mind that could potentially sink your ship? And the broad-based approach for a lot of people that I've talked to when they're approaching retirement, like they're getting to that cusp and they just immediately go to, I can't lose money. I don't have time. I need to be risk averse. Okay, is that reality though? Is that just your assumption based on some limited information? Do you have the total education standpoint? Because we can look at John and say, okay, yeah, $80,000 a year of a burn rate, that's really hard to sustain. I mean, meaning if you had to keep up with that withdrawal rate, you'd be having to take on some extra risk where if we see a market downturn, then everything's turned upside down. But let's talk about, okay, well, is there any, we didn't dive into those questions, but hopefully we can catch up with them. We can. I mean, do you have any other assets? Is there real estate in the picture? What does your Social Security look like? Meaning, okay, you're spending money at maybe an accelerated clip right now, but maybe your Social Security benefit's going to be $40,000 or north of $40,000 a year. Okay, now that takes that drain out of those assets. It takes that pressure off significantly. So again, how do we arrive at peace of mind? How do you have a strategy even if it is a decumulation plan? Okay, let's even get more nuanced that, meaning how much do you want to spend now? Like, you're only going to have your age and health at a certain period of time. So yeah, those might be your more go years where, yeah, you're going to want to do stuff. You're going to want to travel. Are you really going to want to do that consistent travel when you're 80 years old? In my anecdotal experience working with clients who have traveled and they've reached those later ages, no, they don't. They almost come up with excuses of why not to. I'm like, well, why don't you do this trip? Yeah, that's a great idea. And then they start, well, then I got to book the flight. And then it's a long flight and the food on there is not that great. And it's like, maybe I won't go, which is fine. They're still happy. Quality of life is still great. But I just think there's nuance to this whole conversation where you just can't just look at that's those two accounts on an island on their own of and just the taxes. Like it's all part of the coordinated plan, and then you can logic into how the investments serve that plan.
One of the things that happens, and this happens to all of us, is you have significant losses or significant gains. It starts to change how you're going to allocate your accounts. Meaning, take, for example, that last one, which is, I guessed it right, which is, let me guess, your cryptocurrency has done very well. You want to leave that alone, and you're relying on something else. That actually is, it's a problem. It's a problem from the standpoint because we're going to rely on the high gains and expect the high gains to continue in something that we just got lucky and got some really high gains. I can guess that the lifestyle that you would live, pulling $80,000 out a year, I'm going to guess 3 years ago, before he had those gains, he would not have been pulling $80,000 a year from the IRA because he didn't have that feeling of enough wealth. When you see those gains going on, for example, I had 2 calls this last week from friends that had really significant gains in their 401k this year, mostly because they had allocated for the tariffs. And one of them called me and says, hey, I got a $16,000 debt I got to pay on a credit card. He goes, should I pull it out of my 401k? And I said, well, why are you thinking about that now? And he goes, well, I made a lot of gains in it. And I said, well, this is a problem because now we're using a future account for a current need, and you got some great gains, but let me ask you about that debt. It tells me about the debt. It is a rare debt. It was unexpected, and it's not a debt that I think that he would continue to get. He was just found in a place where he had to put it there and then figure out what to do with it later. Second was, I asked him what their income looks like this year, and he told me about that, and he says, should I do a loan? And I said, you know what? Actually, I think you should distribute it this year. And you distribute it, you're going to pay the taxes on it. You don't get yourself back into that spot, and you've got enough critical mass. You can thank the markets for the little boost that you got you out of that. I had another call where the advice went just the opposite. He said, hey, my car's, we got an upgrade of a car here coming soon, and I was going to take some money out of the 401k. I was even thinking about doing it as a loan to go buy a car, and I said, no, it's a horrible idea. You contacted me at the beginning of the year telling me how deficient you were in your retirement savings. We reallocated it, and now you want to go buy a new car? Our discussion was on retirement savings. It was never about a new car. If you had asked me that back in February or March before all that stuff happened, well, then we would have invested the money completely differently, and we wouldn't be having the conversation about a new car right now because I was just trying to help them get back on track. It is human nature. It is what we do as regular investors. We will adjust the course according to how we feel. We'll see how feeling politics is done. It does the same good inside of an investment account. We are the Real Money Pros, 979-59-MONEY. We'll take a break and be right back.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and posters when you spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to The Real Money Pros.
Welcome back. This is The Real Money Pros. TheRealMoneyPros.com is where you can find us, where you can use the Ask the Experts feature. You have questions, send them our way. You will get a response by one of the fiduciary financial advisors on our team. Use the chat feature. If you're hesitant to call a radio program, like sometimes I'm a little sheepish, use the chat feature. It's open right now. I'll respond to it right away. It's literally right in front of me. And if you want to call the program, phone lines are open, 979-59-MONEY. That is 979-596-6639. I got to go out of my way to slow down that number because I got feedback. They said I say it way too fast.
I do too. I do too. It's just formatics of the show. I've been doing it for 25 years. They roll out of your mouth, allow you to actually think while you're saying something, and then it just comes out too quickly. Dr. David Kelly had joined us for an interview over this last week. We're going to play that interview in its entirety next weekend, but we have an excerpt. He did talk about cryptocurrency, and I wanted to play this cut just because you got to wonder, what are the big money managers? So JP Morgan Global Asset Management, we're talking about, this is a big investment company that is handling a lot of money on the behalf of a lot of people, a lot of responsibility. And the question is what do you think about cryptocurrencies? And I'm using that word specifically, and we got his brief response on it, and there's more to hear. But play cut one, if you will, Josh. When we're looking at managing money, we're obviously being pinged a lot with cryptocurrencies, and should we have more access to those? Is that part of the hedge that you're talking about as well, from maybe a dollar that would have lower credibility in the worldwide scene?
Not cryptocurrencies, no. But I'll give you my personal view on this. I don't like Bitcoin or cryptocurrencies. And the reason I don't is because there's nothing behind these assets. You know, I mean, yes, there are 21 million Bitcoins out there, or there's a maximum that can be, but what's backing them? I mean, there's no asset backing them, and they only maintain a value or go up in value because people want to buy them.
Yeah, I mean, he's not wrong. I think there's a lot of people out there, the crypto enthusiasts, that would argue against that there is viability, there is use case, and maybe there isn't an asset backing it directly, that it is the asset itself, in that you could say, well, it's consensus, meaning you could look at you could argue the U.S. dollar, like what backs the U.S. dollar? We're not on the gold standard anymore, but it's I saw this meme or this scene that someone posted online. It's like, here's actually what's backing the U.S. currency. And it's all these clips of the U.S. military, like all these like aircraft carriers and fighter jets flying through. I'm like, okay, yeah, there's a little bit behind that, and obviously the taxing ability of our country as well, that kind of feeds back into it. But I think ultimately, it's consensus. And, there's a part of that clip that what wasn't played. But one thing he specifically said is, like, the last thing you want as a currency is something that's unstable and very volatile, which that is one of the characteristics with Bitcoin. So I agree. When you're talking about from the currency standpoint, hard to argue with his take.
It's like a misnomer to some degree, because we talked about currency, and when we talk about hedges, now, the hedge against the U.S. dollar traditionally for the last 30, 40 years has been gold. And the reason for it is because we have what is known as a fiat currency. A fiat currency is a currency that is backed only by the good faith and credit and the taxing ability of the underlying government that issues that currency. So a fiat currency is that. A cryptocurrency is not a currency. Right now, it's actually an asset, and it's questionable. That's what he's saying. It's really not an asset if it's not to some degree tangible, backed by something. Well, the U.S. dollar is only backed by credit. Well, now we're talking about a private sector pseudo fiat currency. The reason why they were brought on with the term currency is because they were really selling this on the idea that it could be a transaction system using blockchain technology, limited supply, so it could be a replacement where people could actually run remittance payments, things like that, through it with lower processing fees. Well, we've not seen that just yet. We can see the lower processing fees, but we don't see the speed of the processing. So it's not a currency. Now, the ones that are pegged as a dollar, those stable currencies, you could probably make the argument there because there's an asset backing it up that makes it not fiat. These are fiat. And so I understand why he doesn't have the credibility, or he doesn't give it the credibility, but now we got to address the fact that, okay, is it an asset? And the answer to that one is where you have the consensus agreeing that it is an asset, then we can compare that to anything else to include gold, which is, you're not going to eat gold. It's not going to help you survive on a cold night. It's going to provide a way of bartering something for you, right? So again, consensus gives it its value. And so, yes, I actually would only disagree with him slightly on that, but I understand from the money management side of it, which is traditionalist, we want to see something that is behind it, a physical asset, a right. It's got to be a future contract. It's got to have something behind it. So the biggest concern is what is behind these? It's just literally the crowd saying it's worth something. And it's only worth something until the crowd determines it's not, or if the crowd walks away.
Yeah,
and that's my biggest concern is we don't know.
Well, there's comparisons across the board like this where a lot of people, like, you'd be surprised the profitability that's involved with sneakers. I mean, like the trend of Nike and other various shoes, like various models, where there's a lot of people who would say, like, really, like shoes that are used and worn, they cost how much? Like, they're reselling for how much? But again, you have that community, you have consensus that is valuing it. Like, there's a market for it, right? The market, you could argue, is one of the most transparent ways to price something. It's an open market, and that market then determines from buying and selling what the price of that is. You could look at trading cards. I mean, that's withstood the test of time when you're talking about baseball cards and sports players around the card scene. Their ability on that too. Now, true, these are niche things, and maybe not on the scale of what cryptocurrency has now become. I think certainly loses its legitimacy when you go to cryptocurrency.com and it's like the thousands upon thousands of crypto or digital assets that are there. So yeah, I mean,
it doesn't help that some are called fart coin, some are called Zit coin. Like it does not help the credibility of the space at all.
No, it doesn't.
But and then who wrote the programs? And it is, we don't know.
Exactly. That's one thing that is interesting, is that it's it isn't that it is not tangible. It's an algorithm, and some could say it's a very beautiful thing that this. And we're already in this kind of pseudo cashless society as well. And there's certain items that shouldn't be worth what they are. So this is just a part of that same piece. And this is just where things are going in this digital age. And if things get more and more digitalized, and you have the advent of AI, quantum computing, you get into this virtual reality space. I think the NFTs, that non-fungible token piece, I mean, that had its day in the sun, but that quickly fizzled out. But I don't know if that's going to be the case with, your Bitcoin and Ethereums, that a lot of people are extremely bullish on it. And John, with that caller who has, he said 50% of his investable assets in that, I don't think he's certainly not the only one that's taking that approach. So again, in my humble opinion, do these digital assets have a place in the grand scheme of things? Yes, I don't think they're going anywhere. I think this adoption continues. Doesn't mean that it's not going to go up or down in value. I think that volatility is just a part of it, and the fact that there's a mechanism now where you can trade it faster versus previously where if you got it, just the logistics of owning it and even trading it or transferring it to someone else, it was difficult. So like in its own nature, it was just, if people are buying it, the buyers are holders. Like they have no intention of getting rid of it, and we've seen that really change over the past few years.
Do you think it's realistic to see the day where we're going to be transferring payments, the vast majority of it using some sort of a crypto blockchain thing, or do you believe that we're going to have just a big mixture?
I think it's going to be a mixture. I don't think it's going to be. We've already seen the advent of that with the recent legislation that came through, where it really set the framework, where it defined what entities like banks and entities, like I said, can actually issue these stable coins. And to be clear, these stable coins, and again in that clip that we had, it didn't cover that, but Dr. Kelly even mentioned it as well. They have to be backed by an actual asset like U.S. Treasuries, the U.S. dollar. So I do think those, and the ability to transact and not going through these third-party intermediaries, I do think there's going to be something to that. But again, there's going to be regulation. You got to do the know your customer. Like there's going to be these guardrails in there, which I think is going to not have it be just totally free reign and as fast as unrestricted as I think some people are calling for. But to answer your question directly, I think it's going to be a mixture of both. I don't think we're going to stay where we're at exactly. I don't think that pendulum is going to swing so far to where it's all digitalized. I think it's going to be a mixture of the two.
I want to ask the listeners, which is, how do you feel about cryptocurrency moving forward? Is this what's in it that makes you want to own it, or what's not in it right now that makes you not want to own it? Meaning, what news or what would change to make you a believer or a non-believer? Share your ideas, 979-59-MONEY. This is the Real Money Pros. Stay with us. We'll take a break. Come right back. Businesses today face challenges. The hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
And we're back to the Real Money Pros.
We are back. This is the Real Money Pros, therealmoneypros.com. That's how you find us. The end of the program is coming up for today, but you can catch us every weekend, same time, same place, or anytime on our website at therealmoneypros.com. We do have a caller. I see we're queuing that caller up here in a moment. I asked a question before we went to break, which is, if you're not buying crypto right now, what's not in it that if it becomes in it, you'll say, yeah, that's I'm going to certainly start to trust it a little bit more. Or if you're in it, why are you so in it? What is it that you think is going to happen with it? And then what happens if you're wrong? I still want to know. 979-59-MONEY. That's 979-596-6639. Because as we're learning, and this is happening right now in our nation, which is we're becoming more and more polarized. It's almost like it's an all or nothing thing with everything, to the point where you could look at this from an investment standpoint. Yeah, all or nothing is not usually a good investment plan. It's just not. However, from a politics standpoint, we seem to be going so far to the right, so far to the left, that we're forgetting that compromise is in the middle. It's the same thing with your investments. Somewhere in the middle, you got to remember, it's like a pendulum swings to the left or the right. It passes the middle every single time. So the answer is going to tend to still be away from the extremes of the far swings of risk and reward. Crypto is on those far swings right now. And so while we don't oppose the idea that you would have some crypto investments, we do caution against having too much, because even if it works out for you, it's going to establish something new in you, which is confidence that you could do it again. And that's usually when people don't. They have a good experience, let's say, made a whole bunch of crypto, they go into something new, and then they just get everything wiped out because they went in too confident. Developing a strategy means you're going to temper yourself at the very beginning, which is, this is what I need, this is what I want, and this is what I wish for. I'm going to figure out what I got to do to make sure that my needs are met. Then I can start to work for what I want. Maybe the wishes will come later. But at least let's create a baseline that is not going to disrupt everything if something doesn't work out with one of your investments. From a politics standpoint, we're in the same place. We're in the same place right now. And I want to caution people with this idea of, when we had 9/11 happen, I remember I bought a Ford truck before the end of that year. It was a 2002 Ford pickup. September 11th happened in 2001, so I know I bought the vehicle probably in October and November. I was doing the good American thing, which is I was already going to buy a vehicle at some point. I'm going to accelerate it. I'm going to do this. I'm going to buy American. Buying American is great. We need to bring jobs back here, bolster our economy, be proud of the things that we create, but we don't want to become so protectionist or so nationalistic to the point where we isolate ourselves from the rest of the world, because if you look, every political system is connected to an economic system. Nationalism is connected to socialism. It happens. In fact, nationalism becomes a socialistic type of an economic system simply for the fact that you're not acting like a capitalist where consumers have free reign to work into the markets that offer them goods and things that they can purchase and be able to choose from. That's capitalist. If it goes so far to the capitalist side of it, then you're going to have greed and fear, and that's where regulations start to step in. But the answer ends up being a little bit of a mixture. Yes, we should buy American when we can, but not maybe not. Exclude the offerings of other places to give our consumers choices. I gave the example this last week because we were talking about beef prices in the United States doubling in the last 2 years, mostly because of COVID. And I looked up the national average of beef consumption for an American. It comes out roughly at 60 pounds per year. At 60 pounds per year times $6 a pound, which was the big news story, it's $6 a pound. That's $360 a year versus, let's say, half of that, $180 a year. So now you can imagine that we have another country come in with cheaper beef than the United States. Let's say it's at $3. I go out, I'm going to spend $180 on this 60 pounds of beef instead of $360, but I just sold my country out for $180. That's a real argument. Should I protect the beef production here in the United States, or do I stretch my money as a consumer to then favor other industries or to be able to spread the money around? And it always comes back to compromise, which you don't do all or nothing. My concern politically right now is that we believe that we should be completely nationalistic, protect everything, block out everybody else out. But when you do that, protecting that many industries will become support for those industries, which socializes them. It's a slippery slope. The moderation is really where it needs to come back. And that's been my biggest concern, Jeremiah.
Yeah, no, I think is that a what's the word I'm looking for? Like this idea of moderation. Like, is this a goal that's even attainable? Right? Things are sensationalized. It's like one thing that, again, not to ring this Dr. Kelly chamois that we've been pushing along, but I'm really excited about it. It's funny. Even from me being a young guy, I've watched and listened to Dr. Kelly. I've paid attention to a lot of the information that he puts out there and still do. So it was really cool to have that interview. And I asked him, what's keeping you up at night? And one thing that he did mention is kind of like how things are exacerbated right now and how things tend to kind of hit this max, like echo chamber when you look at social media and, are people really paying attention to the right things? And I think, these fears can be expanded to the point where, there's this nationalistic type approach where, in your example, the beef thing. Yeah, I mean, like when we're talking about, I was just meeting with a client and we were talking about like, U.S. and how, it's just kind of this turn and burn, like this consumerism and how back in the day that, you would have an appliance, like a refrigerator, it would last forever. Right. And now it's just this, okay, it's out of use. Let's just get rid of it. Like it's like you're not going to fix it. Like I'll try and fix it. And it's like because I'm interested in doing that. I've always has been. But again, it's just now throw it away and get another one. And a lot of people, small businesses too. I mean, many that I know directly, individuals that they make a great living. And it's solely based on they're buying cheap items from another country. They slap something on it as soon as it gets to their house or their building or whatever, and then they repackage it, they rebrand it, and they sell it for extreme market to extreme markets or markups here in the U.S. So now we have this idea of, okay, this sounds great, like America first. We want to employ Americans. We want to stop buying these cheap goods, but there's this ripple effect. And then, I would appreciate the approach of, how about it's more of an it's more incentivized versus forced, right? Where it's like, hey, if you decide to buy American, then here is the benefit that you're gonna get. I mean, you rewind the clock back a few years, whereas cash for clunkers, or you had the EV tax credits, or you had the tax credits for putting solar onto your house, right? Like, meaning there was a direct monetary incentive to entice this type of behavior, like encourage consumer behavior, where that is likely more of that moderate lane that you're talking about, Brian, where people still have that choice, but that choice just on paper, comparing it to other ones, it's just glaring to know what the right choice is versus no, this is what we're doing because we need to protect the interests of America. Well, it's like, well, America's pretty big. There's a lot of people here. There's a lot of different groups, and a lot of people have different ideas. So that what they hold in higher regard might not be in line with whoever's at the top saying, well, here's what we need to do, and here's why. And we've seen a level of this too, where, you're leaning on certain, like U.S. interests from as far as like protection, like from a military standpoint, or like there's certain routes that have to be done because we have to protect these interests. It's like, okay, is that, again, to your point, it's a slippery slope where if that's being leaned on again and again and again, it's like, okay, it's like, what's the boy who cried wolf? This happened to my daughter, by the way. She's been kind of a little baby as of recently, kind of crying over everything. And I was like, Tori, you got to toughen up, kid. And then she's in the garage. We put down some turf and like these crawling things that people can, that our son can have some fun on. And she's in the garage, and all of a sudden I hear a scream, and I'm like, she's probably fine. Comes back bawling. She actually she had a decent boo-boo, which certainly justified the reaction. But again, I didn't have that initial knee-jerk reaction because she's just been kind of a baby. So again, if they're pulling this lever that no, we have to protect the interests of our country, and this is why we're doing this, that could be a slippery slope. And I think people are eventually going to start looking at this saying, well, is it really, or is this just part of more self-interest of certain specific groups or on certain sides of the aisle? And is there a solution? I think leaving it open to people's choices, and then I think they eventually find that moderate, that in between moderate lane, which I think most people would like to see.
Well, Jeremiah, my connection's a little jittery right now, so I'm going to let you go.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.